Hello and welcome to myfinancesteacher.org. In this video I want to give you just a quick update on gold and precious metals. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Firstly, what happened to me yesterday is I was stopped out of my silver miners position, that's SIL. And my stop loss was at 36.4, and of course it was triggered, and the day closed with SIL at 36.22. Why was my stop loss so close to the ongoing price? Well, that's because I am getting a little bit into cautious territory with gold. The reasons for that are as follows. Firstly, the short-term daily cycle is so far 28 days old. It's not very old cycle yet, but still, with these cycles usually lasting for 1.5 to 2 months, and with the intermediate cycle also on day 105 already, so that's past 3 months period, it looks like both the short-term daily cycle and the intermediate cycle are likely past their midpoint, past the halfway. So I want to be careful, plus the $1,800, even though it can still be broken over the next short term, I think it's still a relatively strong resistance. We still might see a last poke through the upper range of the Bollinger Bands before gold drops down, but in either case, I really do want to be cautious in case if cycle just turns around and moves down from today onwards. So that is why I had my positions quite tight with gold and silver allocations. As I said, stopped out of SIL, and my stop loss on GDX is at $36. So who knows, maybe once the markets open in the US. Oh, by the way, Friday is off. So yeah, if you are in the US, happy holidays, happy 4th of July. I wish you to have an amazing weekend. Now going back to our precious metals, with this stop loss getting me out of silver miners, although I still hold SILJ, junior silver miners, I'm now down from, I think, 97 to somewhere around 87% allocation, still a relatively large allocation in precious metals. That's why I really want to have relatively tight stop losses in case if gold turns around and goes back down into both the short term, just like this, and then later intermediate term decline. Now looking at 14-day RSI, so far RSI looks okay, going back up with the highs on the daily gold price chart. But actually, if you switch to 4-hour chart, what you might notice on RSI is a negative bearish divergence where gold price shows us a higher high on the 4-hour chart, whereas RSI actually gives us a lower high. That is called the bearish divergence, negative divergence. And it's not a bullish sign. And lastly, let's have a look at optimism index in gold. And last time we looked at optimism index, I think it was somewhere just below 70. And we mentioned that there was a chance for optimism to move up a little bit as prices inch a little bit closer to that resistance at $1,800. It looks like that kind of played out, and now optimism is above 70. We're above the red line, which again tells you that you probably want to be cautious as well. So I am cautious, a lot of tight stop losses, so I might be thrown out of the market early next week, but still I do have a relatively large allocation at the moment. And if you want more regular, more timely updates on a range of assets, why not join us at myfinancesteacher.org? Now it's your turn to let me know if we are going to see gold spot price above $1,800 next week. Wouldn't that be nice? Have a nice weekend and good luck in your trades.